What's happening, everybody? It's your boy Kreative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, today I'm super excited what I have planned for you. I'm not going to hold you. I know it's been a minute since I dropped a vibe coding session, but I think today is warranted because we're going to be going over all of our Algo bots trades for February of 2026. I know it's a little bit late too. Like, I hear you, fam. I hear you. But nonetheless, what I want to do today is being able to go over all of our algo trading bots trade for February of 26. So if you haven't already, go ahead and smash that like and subscribe button. So again, on today's schedule, what we're going to be going over is what is a 0 DTE option, being able to go over our 4 strat fam that we have for our algo trading bots. We're also going to be going over the real numbers when it comes to the February results, and also talking about the 4 lessons that I've learned when it comes to being able to algo trade. So let's go ahead and jump over to Cursor, and I'm going to be running a Python file within Cursor to being able to illustrate this a little bit for you, fam. So let's go ahead and jump into it. So again, this is what I have planned for you for the session. I hope that it takes no longer than 10 minutes in order to wrap it up, but I may take a few liberties if I would say so myself. But let's go ahead and jump into it. So what is a 0 DTE option? A 0 DTE option is an option contract that expires today. The main aim of it is to be able to buy the option contract as a morning, right? And an option contract is a contract that enables us to be able to buy 100 shares of the underlying stock, right? And allows us to be able to have a lot more leverage, right? So the reason I like 0 DTE options, because these are option contracts that expire the same day. We buy it in the morning, and the aim is to be able to sell it before the bell. So you buy in between like 9:30, 9:40, maybe 10 o'clock the latest, and the aim is to be able to profit before the end of the day. And the end of the day is 4 p.m. Eastern. And there's no overnight risk, right? And the reason I love 0 DTE options, we're looking at cheap premiums, but the thing to be able to keep in mind is that we have small bets, big potential, right? Small high leverage when it comes to small stock moves equals big option moves. Now, there's a couple of risks that you want to keep in mind, and these risks are it can go to $0 fast, right? So your risk is your premium pay. So there's a limited liability, but whatever you paid can go to zero quick, and there's no time to recover because these are option contracts that do what? That expire the same day. Now, we are going to be facing time decay, which is brutal, meaning every minute costs you, and these spreads are super wide. Now, why do I care about these spreads? If their spreads are wide, that means it's harder for us to be able to get in and out of the contract, right? But if the spreads are a little bit more tighter, then it's a lot easier for us to be able to get in and out of the contract. So that's why I only trade SPY and QQQ, because you're looking at these two ETFs being one of the tightest spread ETFs, one of the most popular ETFs when it comes to being able to trade stocks, i.e., or in other words, options. Let's go ahead and go to our second block. And our second block is being able to understand our 4 strat fam. So I have 9 momentum chasers. We have 3 mean reversion strategies. And what mean reversion is saying is that the price went too far too fast. It'll snap back soon. And these bots are our bounce baby, kid, and meanie. Momentum chaser is that the market is moving. We're going to jump on and ride it. Pause. And these bots are Early Worm, HFT, Penny, Lotto, ADX Baby, AV, Easy Reader, VWhopper, and Mini Bear. And we have Squeeze Play bots, coiled up tight, and it's about to explode. Pause. These are Squeeze Baby and then Range Baby. And then we also have structural bots, right? These are the bots that the chart is telling a story, and we're going to read it. We have Gappy, Star Baby, Breaky, FB Baby, which is the failed breakout, and our second chance bot. So a little bit more about these bots, right? Early Worm is going to be our QQQ, and these bots, again, QQQ, top 100 tech companies within the New York Stock Exchange, right? I totally said that wrong. top 100 tech companies within the NASDAQ. I apologize. And then SPY is going to be the top 500 companies within the New York Stock Exchange. So early worm is going to be one of our strategies that it sees a big candle, then it notices something is happening, right? Then we also have, let's go here. I like this file output a little bit better. So what I want to do is just pick a couple of bots, then we're just going to go over them real quick, right? So I have HFT Baby, which is our high frequency trading bot. It's lightning fast. It is a trend detector. So it's fast moving averages crosses above the VWAP, and the fast moving averages that this bot use is the EMA, which is the exponential moving average, and also the SMA, and then it's looking for those to be able to cross over the VWAP. Now what VWAP lets us know is that if we're buying with the institution, if the price is above the VWAP, right, we're looking that momentum is building, something is going, and we might as well get in. The price is below, then we can still bet it, but we're going to be betting a put instead of a call. So let's look at one of our mean reversion bots. Let's look at Mini Bear. Mini Bear trades QQQ. QQQ is the top 100 tech companies within the NASDAQ. And it's looking at RSI. RSI is the relative strength index. RSI allows us to be able to gauge if something is overbought or oversold. If it's below 25, it's super rare. A green candle appears and the comeback is started. So this bot is betting that, okay, the price went too far, too fast, and is betting that it's going to snap back to its average. So then let's go look at our squeeze bots. Let's go look at Range Baby. Range Baby trades QQQ, and it's a tight range breakout bot. So it's looking at 3 tiny candles in a row, and if the range is under 0.5, the spring is coiled and ready to pop. And then our structural bots, let's look at our break of structural bot. So what it's looking at is the market structure is going to break, then there's a fractional pivot confirmed, and then we're looking for a new direction that has been established. So it's just a bit of an overview of our bots, right? Now let's go ahead. What I think what y'all are here for is to be able to see our performances, right? So I had 16 bots that were active. Out of those 16 bots, they traded 580 times, right? Out of those 580 times, we've seen a 41% win rate. So we're looking at our total P&L is being negative 195, and our profitable days, we had 10 out of 19 tradable days in February. So about 52. So our top performers were HFT Baby, that high frequency trading bot, had 25 trades, 44%, made $44. And we're looking at Second Chance Bot, 43 trades, $43, 64 trades, about 44% win rate. When you ever see that WR, that's win rate. And then Star Baby, $22, 13 trades, 54% win rate. Now, here's a couple of bots that I'm looking at being able to either retire or being able to figure out there's something else that we can do with them, right? We have Lotto Baby, that's under the water, lost $78, 46 trades. Win rate is abysmal. You have Kid, another mean reversion bot. This one lost $62, 42 trades. Again, mean win rate, again, abysmal. And then another Squeeze Baby bot lost $47, and out of 44 trades, 32%. So one thing that I think would behoove us to being able to go over now is just being able to holistically, right, as a whole, being able to go over our trades. So I created this calendar that allows us to be able to just really granularly go over our trades. So let's look at the first day for an example, right? So I know I was just talking about Kid, but you see Kid here, it led the first day that I was able to trade back in February 2nd. So we had 43 trades, and we're up $11. So I'm looking at Kid. Kid had 3 trades, and it was up $18. So about 67%, right? So these are the trades from Kid. So let's go pop this one out so we can actually look at it. All right, let me make it a bit bigger, fam. My fault. All right. So you can see this was a call contract for QQQ at 628. So let's break this down. So we were bullish on the market. We thought that QQQ was going to hit the 628 level, right? So we were able to make 10 bucks off of this trade, about 15% ROI. It was able to get into the trade at, that time doesn't make sense. So so I got to think it got into the trade at like 10:32. And then it got out 15 seconds later. So I'm having UTC errors because UTC, epoch, and that's one of those things that I learned that I thought I addressed. But again, as you can see here, just one of those errors that I need to fix before. But I'm pretty sure I got into the trade at 10:32 because I remember this one. Got into the trade at 10:32, and we all were in the trade for 15 seconds. So we got in at $73. And then we were able to get out at 84, right? So make a nice little chunk of change. $11 we were able to profit. There were some fees, so that's why we are seeing that we're able to profit that $10.94 just from that one trade we are able to do in 15 seconds. And this is just one bot, right? So let's look at the other half of it. This bot did lose us a couple of trades. So let's look at the other half of it. Bot got in at a trade at 10:16. Was in the trade for 15 seconds. It was able to get in. So let's break this down. It was a put. So it was bullish on the bearish. I keep getting that wrong. It was bearish on the market. Excuse me. It thought QQQ was going to go down to the 623 level. So it bought a put contract. Bought the put contract for $58, and then we got out at 57. So the market turned against us. How did I know the market turned against us? Because each one of our bots has a stop loss. So I'm thinking here that the stop loss triggered, and we're going to see the exit reason in a bit here. Oh, exit reason NA. So that's before I fixed it. But now moving forward, like whenever a bot exit, we have that exit reason that populates there. So this is just one of our bots, and let's go look at. And one thing I want to show you, just because it shows here that it's a negative day, right? Right, there are a couple of bots that did perform well, right? So overall, it was a bit of a negative day for us, right? But there's a couple of bots that did save the day. So let's look at Second Chance. Second Chance had a trade that made $59. So let's go look at this trade real quick. I'll look at that, and it was a put. So let's go. This was a put contract. So we were bearish on the market. We thought the market was going to go down. We thought QQQ was going to go down to the 614 level, and we were able to make 59 bucks on it, right? So we got in at 10:14, and we were in it for 18 seconds. I know it says 15, right? So if you do military time, it's 3:14. It was actually 10:15. This is epoch time that it's messing up right now. But nonetheless, let's keep going. So we're able to get in 10:14, and then we're in it for 18 seconds. We got in at 68, and we're able to get out at 76 and being able to make 60 bucks, right? So after the fees, you can see here we're able to make $59 or 78, if you round up 79% return on our trade. So again, let's just go to another day that was a bit negative. So as you can see here, yes, overall, our bots didn't perform well, but there was one bot that did. It had one trade that did save us. So let's look at this. Oh, so we each have the exit reason. So bet. So the bot got in at 10:50. You know, I think that's the time I pulled it. I think that's the time I pulled it. So the bot bet that it was a bearish on the market, so I thought SPY was going to go down to the 682 level. So I was able to buy a 682 put. It got in at 83. It got out at 92. We're able to make $9, right? And then after fees, we're able to make $8.94, about a 10% return. So even though overall, right, we were down for the month after 580 trades, we are down for the month, right? And there's a couple of things that I learned from this. One of the big things that I was able to take away from this, right, is first thing is being able to make sure that we're using the right bid ask when it comes to being able to exit, right? I cannot stress this enough. So one of the things that I noticed from one of our bots, right, it was using the mid price or the fair price when it comes to being able to exit. But that's not what you want to do. You want to use the bid price. Why do you want to use the bid? Because when you getting out of the market, when you want to exit a position, you're going to be using the bid price. And when you want to enter the position, you're going to be using the ask price, right? So think about it this way. When you want to go over somebody's house, what are you going to do? You're going to ask to go over somebody's house, then they're going to let you enter. Then you want to leave. All right, bet I'm bid y'all later, and I'm going ahead and exit, right? right? So that's how I was able to really ingratiate that into the thought process, right? Because before, what happened is that we're using the middle price in order to exit instead of the actual bid price, right? So options have wide spreads, middle price don't exist, and we're always getting filled at the bid on exit, right? So the impact that this cost us was being able to make sure we're saving $280 by using the bid price on exit instead of the mid price. Now you may think that, hey, this is super simple. Why is it something that you didn't realize? Now, sometimes when you are vibe coding, there are a couple of things that'll slip through the crack. And one of those things that did was being able to use the mid and not the bid price. So second thing is stop loss that would almost trigger instantly, right? And reason being so is because we were basing the stop loss based off of the ask price, what we paid, and not on the bid price and what we're going to be exiting on, right? If we're using the stop loss based off of the ask, right? Now, I know may make sense. There is a school of thought that says, hey, you know what? Let me just base it off of my actual cost basis, and I want to be able to stop once my cost basis go lower. I'm not arguing with that, right? But one thing that I was able to recognize is that it's a bit better for me to being able to do it. Where do I want to exit? Right? If where do I want to exit and based on where do I want to cost is getting a lot more further apart, then that's where we're going to get out. That's where my stop loss is going to actually trigger. So we're using our stop loss that's going to trigger based off of the bid, not on the ask, right? So that's another thing that I had to take into account. The third thing is being able to make sure that my stop, whenever I wanted to get out of a trade, right? And these trades are mostly profitable, right? So I know you said it's 580 trades. Out of those 580 trades, I'm not going to hold you. I'm going to chalk up about 300 trades that were just had technical errors into them, right? And these technical errors were these mistakes that I'm laying out here for y'all. And the third one is this when we wanted to exit, right? So whenever we wanted the order to fill, I would give the bot 62 seconds in order to fill. We waited over a minute in order to fill when it comes to being able to exit. Now for 0 DTE, price can move 50+% in those 62 seconds, right? That's an eternity. The fix was being able to reduce it to 1 to 3 seconds, right? If you can't fill the limit order, and the reason I like to use limit orders is because we're setting the price, right? If we can't fill the limit order within those 1 to 3 seconds, then I'm going to fall back to a market order, right? I'd rather get out in under 5 seconds than being able to keep retrying limit orders, right? So impact was being able to have faster exit, and we are now having almost negative slippage, right? So we're actually making a little bit more money when it comes to being able to exit because we're reducing the time that we're waiting or the time that we're polling in order to make sure, all right, did my contract fill? If the contract didn't fill, let me fall back to a market order. Now, the fourth thing that I realized is that the bots were revenge trading, bruv. So it lost the trade, then a bot immediately jumped in, the same strike, same direction, right? Now what happens is that human blow up accounts in seconds. Bot shouldn't do the same thing. So the fix is that we have a anti-chase mechanism or anti-chase requirement that all of our bots have to have. So the fix was there's a 12-second cooldown, and we block the third directional trade and excludes recent strikes. So with this anti-chasing logic, every single bot has it. We're no longer revenge trading. If you took the L, learn your lesson, go ahead and back out. Cool down for a couple of seconds, right, and then get back into the market. The fifth thing that we're able to understand is that, bruv, that's why I start with paper trading first, bruv. Like, imagine if I would have gave this bot how much money, right? And the first thing that it did was a position sizing bug, right? So it's a simple little typo that almost wiped out months of profits. So I had to fix the calculation and add a sanity check in order to make sure that this doesn't happen again. And then the last thing that I noticed was data providers, right? So there's data providers that changed their authorization method mid-February. So we had to be able to account for that. So we added an OAuth migration and also backup excuse me, data providers being able to make sure that the system does have redundancy. So these were just a few things that I was able to learn when it comes to being able to paper trade. So if y'all want to be able to peek how we're doing right now, right? So based off of the market today, now I'm not going to hold you. There's a couple of test trades that I had today, but nonetheless, let's just jump into it. So just based off of the market today, and today's Friday, March the 13th, 2026, whenever you're watching this, we did have Penny for You. And remember, Penny for You, this is our breakout bot. Penny for You did have a trade that is, let me see if I can. Nonetheless, so Penny for You did have a call trade, so it was bullish on the market. It thought Spire was going to go up to the 673 level. It was able to make 60 bucks on that play. We also had our high frequency trading bot. Again, QQQ. Instead of SPY, this bot trades QQQ call. So it was bullish on the market. That one made 11 bucks. So we are progressively getting better, fam, based off of what we're doing. But it's just a matter of being able to be consistent. Now, if you want more videos like this, don't forget to hit the like and subscribe button. It is your boy Kreative. I'll be back at it again with another episode.